Hi everybody, it's Terry Ryder from Hotspotting. Misconceptions and misinformation abound in residential real estate across Australia, and one of the greatest myths of all is the one that says that you always get the best capital growth in the so-called prime inner city suburbs. Now, the research information contradicts that again and again, but it's an attitude that a lot of people retain because they're not terribly well informed. Some new figures out this week speak to that subject, and it's worth repeating what the figures found. They come from the Property Pulse report, and it finds that in the March quarter, again, like so many of these reports, it deals with very generalised figures, a single figure for the entire national market, or all the capital cities combined, which is often very misleading. But this report at least sort of looks behind those figures and breaks it down into sort of market segments. So it says that in the March 2018 quarter, dwelling values across the major city markets were down 0.5%. So that's a sort of result that's likely to cause newspaper headlines that property values in Australia are falling. Well, of course, there's so many different regional differences, but behind that figure, according to Property Pulse, it's actually only in the upper quartiles, the more expensive properties, the values are actually falling. It finds that in the lower quartile, in the March quarter, property values actually rose, and in the middle market areas, property values rose. Only marginally, but a little bit. It was actually in the top 25% where there was the only quartile where property values actually fell. But because these were the most expensive properties, it tended to drag down the overall average. So those generalised figures are very often a source of misinformation. They tend to portray, and this is the way media reports them, that property values are falling everywhere. Well, of course they're not. It's a generalised figure, and when you look behind it, as this report does, you find that actually the upper end of the market, generally speaking, in Sydney and Melbourne in particular, that's where the values are falling. But according to this report, in the cheaper areas and the middle market areas, values are still rising. Then the report turns to looking at the capital city, which is leading on price growth at the moment, the market where that's still really pumping strongly, which is Hobart, and also, according to this report, out in regional Tasmania, where values are still growing at a rapid rate, but it notes that the growth in these markets is being led by the more affordable properties, while the relatively expensive housing market in Hobart is lagging in terms of growth. So in amongst all that jumble of figures, we find that while the upper end, generally speaking, is struggling, values in the cheaper areas are still rising. And particularly within that Tasmanian market, which is the market leader, Hobart's the market leader amongst the capital cities at the moment for properties selling the fastest and for values are rising the fastest. But it's the more affordable properties that are leading that growth, and the upper end is struggling. So it's just one response to that myth that prevails in real estate, that you always get the best growth in the so-called prime inner city areas, the more expensive market. It simply isn't true. So many different bits of research disprove it, but this report out this week is one that speaks to it and, again, disproves that myth. So it's one to keep in mind. If you can't afford the most expensive areas, don't worry too much, because most of the research shows that you're going to get better growth in the long term, certainly very good growth, buying in the more affordable areas of our major cities. That's it for now. Terry Ryder from hotspotting.com.au signing off. I'll talk to you again soon.